So this notification, part 2 of this notification deals with providing additional time limit for satisfying that 10% condition restriction. So what happens is,
Hello.
Hello.
Hi, sir. Your voice is not audible. Yes, now it's okay, sir. Now it's okay.
Okay. So what happens is, a person would not have, a supplier would not have filed as GSTR1 for the month of March. So corresponding entry in GSTR1, which is auto-populated, would not appear. So indirectly, a person would not be able to avail any credit had the provision of Rule 36(4) been operational. So to provide relief, what they have done is, you need not apply this rule for a period of for the period from February 2020 to August 2020 has been made. So by that, what happens is, a person is allowed to avail full eligible credit during this period from February 2020 to August 2020. And in September, again this restriction becomes operational, and whatever amount which ought to be not availed due to non-reflection in GSTR2A in the respective months ought to be reversed in the month of September 2020. So that is what they have brought out by way of this notification. So it is a very welcome move by the government, because otherwise this would put the registered persons into very deep financial difficulty, because they would have procured something, but the supplier not filed his returns GSTR1, then there would be a huge financial impact on the registered person. Okay. So next, let me read the new proviso which has been added. Provided that the said condition shall apply cumulatively for the period February, March, April, May, June, July, and August, and the returns in Form GSTR3B for the tax period September 2020 shall be furnished with the cumulative adjustment of the input tax credit for the said months in accordance with the condition above. The condition, the original rule was input tax credit to be availed by a registered person in respect of invoices or debit notes, the details of which have not been uploaded by the suppliers under 37(1) shall not exceed 10% of the eligible credit available in respect of invoice or debit notes, the details of which have been uploaded by the suppliers under subsection 37(1). This was the rule, original rule or sub-rule. This was explained by way of a circular 123/42 of 2019 dated 11/11/2019. Wherein they have clearly explained that this restriction is going to apply on a month-wise basis. But in the new proviso, whatever had been added, they use the word shall apply cumulatively for the period February to August 2020. So does it mean that the total amount reflected during for the months of February to August has got to be considered cumulatively, and the restriction has got to be worked out, or it has got to be worked out on a monthly basis and the effect has got to be given in the month of September 2020. This is a question, but I will try to explain it through the next slide. So the next here, this is a hypothetical situation wherein we have got eligible ITC in the second column relating to the month of February to August or September. So what happens here is, suppose for the month of February 2020, there is an eligible ITC of 20,000, and the ITC, eligible ITC reflected is only 12,000. If the original sub rule 36(4) applied, a person would be eligible for a credit of 13,200 only, and he would not be in a position to avail a credit of 6,800 during that particular month. So his outward liability or output tax liability or the net tax liability would be higher by an amount of 6,800. This is going to have a very big impact, financial impact, for the already stressed businesses due to this lockdown. So similarly, I had worked out similarly for the period up to August 2020, and whatever appears in blue relates to relief provided for COVID-19. ITC can be availed. So based on whatever proviso that has been introduced now, a person is allowed to take credit for the entire ITC, irrespective of the fact whether that credit appears in GSTR 2A or not. So straight away he stands to benefit 6,800 rupees as regards February 2020 is concerned. So now let us move on to June 2020, wherein the eligible ITC is 10,000, and the eligible ITC reflected is 30,000, which includes ITC of earlier months also. That I have given by way of a note below, if you can go through that. The cumulative effect would be, that person would be, if the original provisions were applied, that person would be eligible to take a credit of 33,000, and in case the relief is relief provided is considered, he would be able to avail 10,000, which is the amount of eligible ITC against that particular month. And if you look at the last column, there is a negative 23,000. This I had shown to show that it is not something a person or a business is ineligible for is being claimed upfront, but it is only something a person is eligible in a future date is being allowed to be claimed by the government. So the effect of such differences or such restriction has got to be computed on a monthly basis, that is for February, March, up to August 2020, and the difference ought to be adjusted in the month of September 2020. So I was asking you a question whether this has got to be done on a monthly basis or on a cumulative basis for the period Feb 2020 to August 2020. As such, I don't think the government has not brought out any clarification as of today, but the wording of the proviso implies that it has got to be worked out on a monthly basis. By monthly basis, what I mean is, suppose the eligible ITC for February is 20,000, and the entire by August or September, the entire ITC gets reflected in 2A. There is no amount of ITC which is not being reflected. So the ineligible amount or the amount restricted would be 0. Suppose for March or April, there is a 5,000 amount of eligible ITC and nothing gets reflected in that month. So what is going to happen? A person, the amount reflected, only based on the amount reflected, we are going to compute the amount which is eligible against whatever amount has not been reflected. So 0 is reflected, 0 is reflected. So 10% of 0 is once again 0. So no amount can be claimed as ITC for the month of, against the month of April 2020. So this is what I'm trying to explain and understand basically. It has got to be computed on a monthly basis, and the net impact has got to be provided in the month of September 2020. So by that, I have included a note at the end. See, I have assumed that everywhere the amount of ITC reflected is less than say 91%, because on 91% the 10% works out to 9%. That's why. So that in the given example, at the end of the period, the cumulative effect of credits availed would be 89,100, applying the provisions, new provisions, and as per the original provisions also. This is not going to change. That is what I tried to bring out in this table. So this is the first notification. It had two parts. One part is very straightforward. It is a relief for the composition dealers. And the second part deals with ITC. The second part is what is important. And I hope we have done justice to that part. So now let us move on to the next notification. Notification number 31/2020. This is a notification which seeks to provide relief by conditional lowering of interest rate for tax periods from February to April 2020. So what is the concession which is being given? Concessional rate of interest or no interest if certain conditions are fulfilled. That is, the tax rate, the tax need to be paid and the returns need to be filed before a specific date. This is 31/2020. The next notification is 32/2020. This relates to, once again, 3B returns, late fee on 3B returns. If the returns for the period February to April 2020 are being filed before the specified date, no late fee would be levied. So the condition is they need to be filed before the date specified. Then I move on to notification number 36 of 2020, because this also relates to 3B returns. Unlike the earlier notifications 31 and 32, wherein there is no extension of the due dates of the 3B returns. They don't provide any extension for the due date of filing of 3B returns, but they only give some relief for filing the returns up to a certain date. But 36 of 2020 relates to extension of due date in respect of the month of May 2020, wherein the due date for May 2020 has been extended to 27th of June 2020 for registered persons having turnover exceeding 5 crore, and 12th of July and 14th of July 12th of July for South India and 14th of July for North India uh, for the month of May 2020. See, in the presentation, I had mentioned as 12th of June and 14th of June, which ought to be corrected. So there are three categories. Let me move on to the next slide, wherein I have tried to explain the due dates. Basically, this provides the due dates. It has been done category wise. There are three categories. Category 1 relates to persons, registered persons having aggregate turnover of more than 5 crores. For the 4 months, February to May, the due dates are the 20th of the subsequent months. So what would happen if the due dates, if a person is going to file the return within 15 days of the due date, there would be no interest liability. So that is the relief being given. If a person is going to file the return belatedly after say 15 days, but before 24th of June 2020, he can pay interest at the rate of 9% per annum for the period beyond 15 days. That is the relief which is being provided through this notification. So what happens if a person is going to delay it by just 1 day? So if a person is going to file his returns on 25th of June 2020, he interest at 80% from the original due date, that is 20th of March 2020. Further, even late fee would be applicable based on the original due date only. So it is going to cost a lot if person is going to laterly.
Hello. Hello, are you going, sir? So just 2 minutes, I just ask the speaker to connect up.
I think now I am audible.
Yes, sir, your voice is audible, sir.
So sorry for the connectivity issues.
Yes, sir.
So what happens is, if there is going to be even 1 day delay beyond 24th of June 2020, and if the liability is going to be huge, it is going to have a very big impact on the pockets of the large taxpayer. So now let me move on to the next slide, which is 3D, where for category 2. Category 2 relates to registered persons having an aggregate turnover of less than or equal to 5 crore, but more than 1.5 crores in the previous financial year. So the due dates, the original due dates, considering the person in South India, it would be 22nd of March 22nd of April and 22nd of May, there is absolutely no interest liability if a person is going to file his returns before the dates stipulated in the notification. The dates stipulated in the notification are 29th of June for the month of February 2020 and March 2020. And as regards April 2020, it is 30th of June. If this due date is going to be not met, even if there is going to be a 1-day delay, then interest is going to be payable at 18% right from the original date till the date of payment or filing of returns. So here again, it is going to have a big impact. Next is as regards late fee also, the same thing is applicable. If the return has not been filed by 29th of June or 30th of June respectively, late fee is going to apply from the original date of filing of return. As regards May, 12th July 2020 is the due date which is being provided for South India, and if it is going to be North India, it is 14th of July 2020. So now let us move on to the third category of persons. Persons with aggregate turnover up to 1.5 crores in the previous financial year. So it is once again, no interest needs to be payable if the due date notified has been adhered to. For February, it is 30th of June 2020. For March, it is 3rd July 2020. For April, it is 6th July 2020. And for May, the due date got extended to 12th July 2020. So what would happen? Once again, these dates apply to South India. What happens if a person is going to file belatedly, say beyond, say if the April 2020 return is being filed on 7th of July 2020, he needs to pay interest at 18% from the original date, that is 22nd of May 2020. Also, late fee would be applicable from 22nd of May 2020. So the crucial factor for these dates is once again the category of the person. Category of the person has been related to, is based on the aggregate turnover. Suppose in 1 year, say in 1819, a person had a turnover of say 1 crore only or 1.25 crores only, which is less than 1.5 crores. Then he would be a category 3 person. But assuming in 1920, his turnover is more than 5 crores, then he would be a category 1 person. So care should be taken to advise the registered person accordingly, because in that case, because filing of February, April return can be done only if February and March return has been filed. So though the due date for February and March return for a category 3rd person is
Okay. Okay.
Am I audible, please?
Okay.
So a person can fall under category 3. Thank you. A person can fall under category 3 for the first 2 months, and category 1 in the subsequent period. That is, once this turnover for 1920 had exceeded 5 crores, he would fall under category 1, wherein his due dates would be for the month of April 2020, he needs to file it before 24th of June 2020. But whereas for February and March, he has time till 30th of June 2020 or 3rd of July 2020. It would be advisable that he files his returns by 24 June 2020, as otherwise he would be facing penal consequences. So next, let us move on to the next notification. Next is, I try to explain the interest and late fee computation, taking one case. This is a case wherein the liability or the aggregate turnover of a person is, can we move on to the next slide, please? So I have given an illustration for notification wherein the liability is 25,000 net tax liability, and it is the month GST or 3B return for February 2020. In case it is filed by 20th of March 2020, the liability would be just the next net tax liability. If it is filed within 15 days, yes, it is going to be the same liability. If it is going to be filed on 24th of June 2020 with a 96-day delay, interest would be applicable for 71 days, 96 minus 15 or 81 days. And the total tax payable would be 499. It is worked out at 9% on 25,000 for the period beyond the 15 days. And if it, and a 1 day delay, instead of filing it on 24th, if he is going to file it on 25th, he would be liable for interest at 18% and besides late fee, which is going to may have a significant impact. We should be more bothered about the interest because the net tax liability may be huge in most of the cases. The next illustration is for a person who falls between 1.5 and 5. Here again, if he is going to stick on to the due date of 29 June or specific date of 29 June 2020, he is not going to have any liability. If he is going to just delay it by 1 day beyond that, for a 25,000 liability, he needs to pay 31,233. So by this, it explains a person is already caught by this COVID-19, and his business is going to be definitely affected by COVID-19 if he is not going to be compliant with at least the extended dates. I don't know whether the government would extend these dates further depending on what is going to happen, but as of today, it is always better to advise the client that he sticks on to the due date specified. And the third is a similar example wherein a 1 day delay, that is his due date is 30th of June 2020, and a 1 day delay is going to cost him the same 31,295. So by this, we are trying to only explain that the specified dates are very crucial, and category of person is also crucial, and the category of person may change over the period. That is, for the first 2 months it may be different, and for subsequent 2 months it may be different, and a slip would cost would cost us much. Now let me move on to the next notification. Notification number 33 of 2020. The subject of this notification states that this notification seeks to provide relief by conditional waiver of late fee for delay in furnishing outward statement in Form GST R1 for tax periods February 2020 to April 2020. This is the subject which is being, if you look into the GST website, it would show against this notification number, this would be the subject. It states that it is for the period February 2020 to April 2020. But the notification, if you look into it, it says it is for the period March to May 2020. So this particular notification applies only for the period March to May 2020, and it does not apply to the period February 2020. This I thought I should highlight to you. The due date, once again, they have provided relief by way of not charging late fee if a registered person files GST-R1 for the period March to May 2020 on or before 30th of June 2020. So this is the same across all categories, be it category 1, category 2 or category 3. Though category 3 have a different original due date, it is going to be the due date specified by the department through this notification is going to be the same. Once again, if this notification is not, if the due date specified by this notification is not adhered to, or the due date specified is being delayed by 1 day, then it is going to cost us much. This being only a informative return, filing of this should be taken up on a priority basis, rather than, because it does not involve payment of any taxes. Next, let us move on to the next notification. Notification number 34 of 2020. This relates to composition scheme optees. So this relates to return that need to be filed by these composition scheme optees. They need to file 2 returns, one an annual return and one a return for the quarter. This quarterly return for the quarter ended 31st of March. The due date was 18th of April. It gets extended to 7th of July. So the due date for this CMP 08, which is the quarterly return, got extended to 7th of July 2020 through this notification. And the next is the return for the financial year 2021, GSTR4. The due date gets extended till 15th of July 2020. In these cases, unlike the previous 3B or GSTR1 returns, the due dates here have been extended to the date specified. This is the subtle difference between the earlier notifications and this notification. Now let us move on to notification number 35 of 2020. This is the most important notification in the series of notifications which have been brought out or which have been notified by the government. This notification seeks to extend the due date of compliance, which fell between 20th of March 2020 to 29th of June 2020 until 30th of June 2020. That is the first part. And the second part relates to extension of validity period for e-way bills. Now let me cover the second part first, because the second part is quite straightforward. Extension of period of validity of e-way bills. Suppose the e-way bill was generated under Rule 138, and depending on the distance the validity period for the e-waybill, say, lapsed somewhere between 20th of March 2020 and 15th of April 2020, it got extended automatically to 30th of April 2020. So the validity period of the e-waybills got extended to 30th day of April 2020. So now this is a notification dated 3rd April 2020. So now that with the lockdown being extended, this date would be further extended, is what is the expectation from the industry. But we will have to definitely wait and watch. Maybe in a couple of days, notification would be there. So next, now let me move on to part 1. Part 1 deals with due dates for specified compliances under CGST, IGST and UTGST. All these got extended. Most of the specified compliances get extended, but there are certain specific exclusions also. Time limit for completion or compliance of any action specified in, prescribed in, or notified under the Act, which falls from 20th of March 2020 to 29th of June 2020, and where such action has not been completed within such prescribed time, then the time limit for completion or compliance of such action has been extended up to 30th of June 2020. So, if the time limit for a specific compliance under the Act, say, falls on 1st of April 2020, it gets, let us assume it is a refund application which ought to be made on 1st of April 2020. It gets automatically extended up to 30th of June 2020. Suppose, let us also assume that the same refund application has got to be made before 29th of June 2020. It also gets extended to 30th of June 2020. That is what is the crux of this notification. So, is it only for the registered person or any other person or stakeholder? Not only them, it applies to every authority, every commission and tribunal. This extension of dates applies. See, what are the actions covered in respect of an authority? Completion of any proceeding or passing of an order or issuance of any notice, intimation, notification, sanction or approval or such other action under the Act. For all these compliances or for all these acts, the due date gets extended. And as regards a registered person, it would be filing of any appeal, reply or application or furnishing of any report, document, return, statement or such other record. So everything gets extended till 30th of June 2020. However, there are specific exclusions. There are a list of exclusions which have been given, and we need to be careful, because if such exclusions have been wrongly considered as though time limit has been extended, then we need to face the repercussions provided under the law. So now let me move on to the exclusions provided. So chapter 4 relating to time of supply has been specifically excluded. For time of supply, based on the time of supply, the date of liability for any transaction of supply is determined. So if the time of supply is going to be on, see, a person dealing with some essential sells some goods on 1st of April 2020. The liability is, the time of supply is 1st of April 2020, and the liability for that transaction is determined for the month of April 2020 only. By providing an extension, they do not want to extend the time of supply to 30th of June 2020. All these are similar cases wherein the period does not get extended, or these are exclusions wherein the extension of the period for compliance is not getting, or completion is not getting extended to 30th of June 2020. This next comes to next exclusion applies to section 10.3. Section 10.3 of the CGST Act deals with date of lapse of composition option on the turnover exceeding the prescribed turnover. See, suppose let us assume a person from the northeastern state. He is under composition scheme. So the limit provided for composition scheme is 75 lakhs. See, he during the year, he on say 20th or 25th of March, he crosses that 75 lakh limit. Is he supposed to come out of the composition scheme, or he has got a time frame of up to 30th of June to come out of the scheme? Is a question. This being a case of specific exclusion, that date of 25th of March applies, and he has got to come out of the composition scheme. The next relates to period allowed for obtaining registration, section 25. See, let us take the case of a person having a engaged in supply of services, having a turnover of say 20 lakhs, less than 20 lakhs, 18 lakhs in Pondicherry. So in March, on March 25th, so he had not got himself registered. On March 25th, he has crossed the 20 lakh limit. So once he becomes on that date, he becomes liable. So within a period of 30 days, he has got to obtain a registration. Whether this 30-day period also gets extended through the application of this notification, it is a clear no. Next is section 27, period of validity of registration as casual taxable person or non-resident taxable person. It is similar. They have got a 90-day period validity of registration. So with the lapse of 90 days, their period of validity of registration also lapses. There is no extension being provided. Section 31, time limit for issue of a tax invoice. See, let us assume the case of goods. It was the same case wherein on 1st of April, I am going to a person's supplier supplying essentials sells goods. Can he say that he has got time up to 30th of June to provide us with an invoice? It is a clear no. So section 31 also the rest, it applies. It continues. Section 31 continues to apply, and the extension does not apply for a case covered under section 31. Next is section 37. Section 37 deals with due date for furnishing details of outward supplies. This is once again GSTR 1. The relief had been provided through other notifications, and so here it has been excluded. Next is section 39. In this exclusion, there are specific exceptions. So except section subsection 3, 4, and 5 of section 39, the exclusions apply. That is, in respect of cases covered under section 39.3, 39.4, and 39.5, the extension of due dates apply, wherein the GSTR returns of non-resident person, input service disputer, and TDS returns, the dates get deferred. Now let us move on to section 47, which is also an excluded section. Levy of late fee. Late fee of non-filing of various returns and details. Basically, relief has already been provided through other notifications, and so it has been excluded from this notification. Next is section 50, interest on delayed payment of tax. Here again, relief has already been provided, and so it has been excluded. One other thing which we need to take care of is in the latest GST Council meeting, it has been categorically decided and recommendations have been made that interest is leviable only on the net tax liability and not on the gross liability. But notification for giving effect is yet to has not been effected till date. That is a point to be taken care of. Next is section 68, inspection of goods during their movement, except insofar as they deal with e-labels. So if a vehicle, though during lockdown, essential services are being allowed. So let us assume essentials are being transported from one place to another. Can the officer intercept? Yes, he can intercept the vehicle. The transporter shall be required to furnish the tax invoices. So here this exclusion does not, this period of extension does not apply, and hence it is a case of exclusion. As regards e-label, the period of validity has already been extended through another part of the same notification, and hence it categorically says that this exclusion does not apply to e-label. Next section which is getting excluded is section 69. Section 69 deals with power to arrest. So can an authority arrest some person who does some act which warrants his arrest? The authority is supposed to provide the person arrested with the grounds of arrest and produce such person before the magistrate within 24 hours. Whether these time limits are getting extended? No, because this section has been specifically excluded. Next comes section 90. Section 90 deals with liability of persons, of liability of basically partners of a partnership firm to pay tax. As regards partnership, the liability is always joint and several. So a person, a partner is supposed, or a partnership firm is supposed to intimate the retirement of partners within a period of 30 days. In case they do not do so, then the partners who have retired also continue to be jointly and severally liable for the liability of the partnership firm. This through this exclusion, the period of 30 days has not been extended. So even now, if the intimation by a partnership has got to be done within a period of 30 days from the date of retirement. Then section 122, it relates to penalty for certain offenses. Say one of the offenses is when a person collects tax and fails to pay the same within the 3-month period of the due date, it is an offense liable for a penalty. Whether this 3-month period gets extended through this notification or provision or through this notification, it is clear no, because this is an exclusion. There is a specific exclusion for section 122, and all such time periods given under section 122 will not be affected through this notification. And finally, the section 129 dealing with detention, seizure, and release of goods and conveyances in transit. See, it has got when a transport vehicle is getting detained and goods are seized and or released, there is a specific time frame within which acts have got to be performed. Say there is a time frame for issue of notice, then reply, and such things. So those things need to be adhered to as per the provisions of section 129 and the rules thereunder, and the period does not get extended. And the final thing is rules. So corresponding in these sections, there are several rules which have been prescribed to give effect to the provisions. These also do not get affected. Suppose these also do not get affected through this notification. So now we have covered the first part of our discussion. Basically, the first part deals with what were the notifications provided by provided under CGST Act for giving various relief to the registered persons due to this COVID-19 pandemic. So, if we look into it, these are basically, there are it is true that government depends on businesses and more so on large businesses for its finances. So the government has thought it fit that relief needs to be given to the MSME sector and small suppliers. That is clear. Of course, the interest of the large corporates have not been given a go by, because the interest levy is only 9% as against the 18%. They have half the amount of interest that would be charged. Moreover, they are given a breather of 15 days time. So if it is definitely a welcome move, considering the disruption that has been caused by COVID. With the extension of the lockdown, maybe the government would move in and provide more relief. That is the expectation from the industry, and I believe it is a fit case for providing more relief also. So now let me move on to the next part of the discussion, which relates to recent rulings of authority for advance ruling. I thought I could discuss some recent rulings. I had taken up 3 cases. Case 1 relates to Karnataka state. Water Health India Private Limited is a party, and the reference is 12/2020 dated 18/3/2020. What was the question before the authority? Whether supply of purified water to public in empty unsealed cans is exempt under GST law. The entry for exemption is water, open brackets, other than aerated, mineral, purified, distilled, medicinal, ionic, battery, demineralized, and water sold in sealed container. This entry falls under HSN code 2201. While discussing, the authority had said that the word "and" used before the water sold in sealed container in the entry is distinctive in nature, and lays down that water sold in a sealed container is another type of water and excluded from the said entry. So by that, what I mean is, this is not conjunctive in nature. That is, it is not something like purified and water sold. Had the word water not been there, the entry would have conveyed a different meaning. It only means that purified and sold in sealed container. Then it would have been exempt. By inclusion of and water sold in sealed container, it conveys an altogether different meaning, and it has been, I would say, it has been rightly excluded, considering the wording of that particular entry. So the ruling is, supply of purified drinking water to public in an unsealed container is not entitled for exemption from GST. So this I had taken up because this is how, though it is a case of treating it as grow revenue, but this is very important while classification and while applying description for a particular goods, to consider whether that particular item is exempt or taxable. So for that, I thought this ruling is important. The next ruling which I thought I should discuss is that of Rajasthan State, Messrs. Clay Crafts India Private Limited. The reference is AR 2019-20 33 dated 22/2020. The question before the authority were two. One, whether GST is payable under RCM on salary paid to directors of the company who is being paid salary as per contract. The second one is whether the situation would change if the director also is a part-time director in other company. The facts of the case is, the company had 6 directors. They were working at different levels of management, like sourcing, marketing, production, etc., and they were paid salaries. And they had been treated as employees for the purpose of income tax and EPF also. The other additional fact is a commission had been paid to them, and that commission was subject to GST under RCM. The ruling was that the consideration paid to directors shall attract GST under RCM. This, though the ruling would, there is scope for further appeal against that ruling by that registered person, though it can be claimed that the ruling applies to that person only and to that jurisdictional authority only in respect of that person. But it only opens a, such decisions would open a very big the Pandora's box, and in the days to come, I am sure a lot of notices would be issued by the department asking us to show cause why remuneration to director, full-time director being paid salary, has not been subject to RCM. In that, basically, if we look into the facts and details being provided, details that had been provided by the registered person to the authority, or by the applicant to the authority, they had clearly stated that they had in fact quoted decisions of the Supreme Court as regards IT is concerned, as regards EPF and ESA is concerned, that a person, the managing director, is treated as employee of the company, and there is a clear contract between the company and the director. Somehow, the jurisdictional authority has categorically said that he did not find that director to be an employee of that company, and so RCM needs to be applied in this instant case, and tax need to be charged. That was the stand of the jurisdictional authority. And this is the ruling, and this definitely will have a far-reaching effect on almost every company which is going to pay salary, and it would be advisable to caution, and it is high time that it is being taken up. This issue is being taken up with the ministry, so that it is being resolved appropriately. It is not something new. This is not a new law that has come in the GST era. It applies equally to the pre-GST era. In once RCM on payments made to directors was there right from 2012, and I don't know why this sort of interpretation is being done now. So I think this is a very, very important ruling, and so let me move on to the next ruling. This relates to West Bengal state. Messrs. Shakshi Jajharia, 41/2019-20, dated 10/2/2020. Whether crushing of grains for distribution through PDS is an exempt supply. Here, the point discussed was the supply can be related to distribution through PDS, which is an entry covered under entry number 28 of the 11th schedule of the Constitution. It will be an activity in relation to a function entrusted to a panchayat under Article 243G of the Constitution, and its supply is to the state government. So these are the facts. The ruling was, if the applicant's government agreement with, because there is no agreement were produced to the authority as on date, because this agreement was to take place, and at that point of time it had not taken place. So if the applicant's agreement with the state government binds both the supplier and the recipient in such a way that neither can divert the food grains to any use other than distribution through PDS, the applicant's composite supply of crushing the food grains belonging to the state government and delivery to the state government in the form of crushed grains will be exempt under serial number 3A of the notification. Basically, what they say here is, what they try to conclude here is, it is an activity in relation to an activity provided under Article 243G of the Constitution. If that is the activity, then of course, given the cap of 25% of value addition for in the composite supply, a person, the activity gets exempt. So this is a decision favoring the applicant or favoring the assessee or supplier. So I thought it fit to discuss it here. Once again, this activity of crushing has been considered as an activity in relation to a function entrusted to a government authority under Article 243G of the Constitution. Is the stand taken by the applicant, and it found favor with the authority also. So that is why I thought it is important to discuss this session. So now I think I have come to the end of my session. So maybe I can take up questions also. And thank you for giving me an opportunity to present my thoughts on these on this subject. And it was wonderful. See, necessity is the mother of invention, and I am proud that our branch has taken the initiative to arrange such online presentations for the benefit of members. This is a wonderful thing, and the managing committee headed by the chairperson is to be appreciated for this. Thank you very much for the opportunity. Thanks one and all. Madam, you are not audible.
Disconnect ஆயிருக்கு சொல்றது.
Is it audible, sir? Hello? Thank you, sir, for your explanation and a detailed example, which give us very informative and useful for the filing of returns and even the advance ruling which was shared by you, sir. Before going to question and session, I request the Vice Chairman of SCRC of ICA, C. Jalapati sir, to give his special address. Over to you, sir.
Thank you, madam. Very good evening, Chairperson Kritika, and Speaker of this evening, C. Hari sir, and members of the Pondicherry branch, and other members from across the South. Once again, very good evening. First, let me wish each and every one of you the great Tamil New Year. This Zoom meeting definitely is very good initiative by Pondicherry branch. It's a branch like Pondicherry. It's a very small branch. Very minimum members are attending. This is a good initiative. This is a best example for other branches. I personally thank and appreciate the initiative by the chairperson of the Pondicherry branch. This is a high time. We have to adapt the technical changes, technological changes. So really, really great. Even after this corona issues also, maybe branch, you can think monthly once, you can invite for this meeting like Zoom meeting or technical meetings. So speakers from across the India, maybe Delhi, Chennai, Coimbatore and Mumbai, you can invite. Definitely it will be beneficial to the members, students, as well as the speakers. They need not come need not come all the way from the various places. Definitely it will be useful. It's a great initiative. Once again, thank the chairperson for this great initiative. Wish you all the best. Be safe and take care.
Thank you, sir,
Thank you.
for the greetings and your message. Now it's time to have a question section. I request the members to ask any queries regarding the GST notification and also the advanced ruling. By way of hands raise or by giving a chat. A question is from Premnathan sir. I request him to go ahead with the query, sir. Premnathan sir. Premnathan sir, your voice is not audible, sir. Premnathan sir, your voice is not audible, sir. Not audible. Okay, sir. He will ask this query by way of email, sir. I think his connectivity has some problem. Kushal is having one more question, sir.
No questions. No questions. Hello.
Yeah, Kushal.
Yeah, no questions. No questions. I was just telling that if the questions could be typed, that's it. Nothing. No questions. Yeah.
Yeah, yes. Questions can be typed also. Okay, sir. I just ask our secretary, Sadish Kumar sir, to give us his vote of thanks. Sadish Kumar sir?
Yes.
Yes, sir.
Okay, madam.
Yes, sir. It's
Okay. Respected senior members of the profession and my professional friends and my colleagues in management committee, very warm good evening to one and all. On behalf of Pondicherry branch of SARC ICI, I thank CA Hari Govind sir for sharing his knowledge and thoughts with us, and also thank our SARC Vice Chairman CA K. Jalabadi to joining with us and give special address. And also thank all members who have participated in this webinar. Thank you, one and all. Thank you, madam.
Thank you, sir. I unmuted all the participants. If any queries or anything you want to talk, you can have a discussion for about 2 minutes. Yes, all the participants are unmuted.
எனக்காக பிரச்சனை இல்லை தூக்கி போட்டு வருவேன் என் காலம் ஸ்டார்ட் ஆகும் ரொம்ப நாள் கழிச்சு கண்ணாடி போடுறதால வேண்டாமா பெட்ரோல் பங்க் இருக்குங்களா நிச்சயமா ரெண்டு பேரும் காசு வாழ கொடுத்து
Thank you all for the participant. I think today the participant list was crossed 60. I thank all and our especially our speaker, Hari Govind sir. Thank you all.